Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Two more interesting companies are going to be put in front of you for your review in the top stock picks this week. One of them, well, I'll wait until we get to that part of the program. Eric Dutram, Brian Hamilton here to profile a company that each has chosen. We're going to start with you, Eric. Primerica, financial services company, been around for a while.
That's right, and I'm taking a look at this one in particular because of its life insurance division. And people have been talking a lot about the financial services market as of late, that it's going to be very strong with the rising rates, but everyone's focusing on the banks. But life insurance is really where it's at for the rising rate story, because when people get the premiums, they have to invest in long-term bonds. And so companies like Primerica, they'll do a lot better with rising rates. It gives them additional income. So I'm looking for this one to be a strong performer if we do see the rates continue to go higher. Estimates have also been moving in the right direction, as we see on this chart right here. Estimates over the last 30 to 60 days, all up for this fiscal year, and then all up again for the next fiscal year. And this has turned into about a 2.3% move higher in estimates for the full year, and then the next year up about 8.3%. And I think part of that is because of this whole idea that rates are going to go up slowly, but over time they're going to be a lot higher. Granted, the stock has moved up a bit over the last year, up about 93% in the last 12 months. But as we can see, the earnings estimates for this year and then the following year are moving quite higher. And it does actually still have a B for its value score and a PE below 20. So I wouldn't get too scared off by the recent run-up. This is really a play on rising interest rates, and that's really the key reason to be looking at this number 2 ranked stock right now.
All right. Brian, I'm just going to say that your company may be flying under the radar for most investors.
Yeah, Gol Intelligent Airlines is how it's translated in Portuguese. When you see the name, it's a little confusing, but it's in Portuguese. And this is a play on the improving Brazilian economy and the improving Brazilian real, the currency. The Brazilian economy is coming out of a little stagnation, but it's also showing signs of improvement. The real is actually strengthening against the U.S. dollar, and it's expected to continue to strengthen against the U.S. dollar throughout 2017. Now, recently, Gol reported earnings where they missed both top and bottom lines, but they saw year-over-year gains in revenues of 17%, and EPS was up over 300%. Now, what has analysts going crazy right now and the stock price soaring is management improved some guidance. They now expect margins to significantly improve, and also revenue per seat per available mile, which is an important matrix in airlines, is supposed to increase by 7% year over year. Further, management announced that they saw significant improvement in forward bookings for February and March. At the same time, management also increased the average cost per ticket, and they're improving their overall fleet, which is designed to cut fuel costs. Now, analysts have obviously taken notice of this because they're streamlining their situation, reducing costs, and increasing their fares. So if we take a look at the estimate consensus trend chart here, you can notice that we went from 0 to 15 cents. You can see negative 235 to a negative $1.70 for annuals, where we have some big jumps here. We went from negative 310 to negative 34 cents, $1.80 to 94 cents. These are massive jumps here. Now let's also take a look at their pricing consensus chart here. As you can see, during the downturn like 2015 through 2016, where the Brazilian economy was having some difficulties, now as the economy is starting to improve, you'll see the price of the stock is going up and the estimates are going significantly up here. Now, what's another interesting chart here is to see the performance against the S&P 500. Now, the S&P 500 over the last year is up just under 20%. GOL is up over 230%. So now analysts are really, really high in the stock, and it's not just the play for 2017, it's also 2018. As the Brazilian economy improves, this airline should improve right along with it.
But do they serve their passengers meat on a stick? That was my question.
Maybe on special occasions they have some kebabs, to my understanding, maybe.
Okay, see what you can find out.
Yeah, okay.
Do either of you own these stocks?
Do not.
No, I do not.
All right, check out more stock information on our website. If you're not there right now watching this very interesting video, get over to the homepage. There's stock commentary, stock picks, and stock picking strategies, all for your review and consideration. With Eric and Brian, I'm Terry Ruffalo.